Georgia's tourism sector has experienced one of the strongest recovery in the region. However, the growth in demand does not always translate into the long-term economic resilience or sustainable investment. To understand how countries convert tourism demand into long-lasting economic value, I spoke with Sérgio Guerreiro, the chair of Tourism Committee at the OECD. Georgia has experienced one of the fastest tourism recoveries within the region, at least, with visitor numbers growing strongly, especially after the pandemic. Yet the rapid growth does not always translate into this long-term economic resilience. So from an OECD perspective, how would you assess the current stage of Georgia's tourism development?
Well, I've reached the numbers, and I think Georgia is following the trend of a fast recovery. It was not common to all countries, but I think the European countries made it quite well after the pandemic, and in 2024, I think almost all of the numbers were pre-pandemic levels were reached, which that's a very positive thing. Also in terms of revenues, and one thing that I wanted to point out, it's not only about level of volume of people. I think that one of the most important blocks is how can you translate that into exports? Let's call it like that. I'm a true believer of the role that tourism can play in economic development, and here is an export sector, definitely an export sector, and that growth I think is even more significant from that point of view. The thing is, when we get out of the pandemic, we thought that, well, conditions for growth were all there, but if you think about what happened since the pandemic, a lot of uncertainty came to, I would say, almost all geographies in the world, and that represents a challenge for tourism. One thing that I wanted to point out regarding the tourism development is, don't take tourism development as a short-term trend. You have to invest in the long term to actually guarantee the levels of transformation that we do. We used to call it that at the OECD, build back better. So how can we use the lessons that we got from a huge crisis like the pandemic into transforming our destinations in something that, at the same time as they remain competitive, they bring more value to economies and to residents in the end. So that, I think Georgia is not different from many other countries that we have around the table, which is how to transform this fast recovery into something that it's long-term, that it's transforming and helping other economic sectors within the country. So how can we build together that development? And in the end of the day, how can that be transformed into quality of life of residents?
Yes, and you raised an important issue here, because visitor growth is not always synonymous with the growth of the investment within the sector, right? So what distinguishes the country that attracts the visitors versus the country which attracts the capital within the tourist sector?
I think one thing that we are pretty much, we value pretty much the planning process, the policy, the strategy. So having a proper strategy, that it's a long-term strategy that involves all sectors, so the public sector, which is a producer in the tourism economy, is I would say a different sector from other ones. Is that actually governments and states and municipalities, they are co-producers of things. They need to do investments in infrastructure, in attractions and so on, and at the same time creating the best possible environment for attracting good investment. Because I think here is why do I say good investment is an investment that it's aligned with a long-term strategy of destination. As I was saying, tourism is not it's not a 100 meters run, it's actually a marathon. So if you have that, you have to have consistency on the policies, you have to have instruments for developing infrastructure within the destination, to have capacity building of tourism workers, and at the same time creating the framework that allows investors to actually come to your country and build the types of products that the strategy needs for achieving the long-term goals.
OECD quite often emphasize on this notion of quality investment. So what differentiates this kind of quality? What's the difference between this quality investments and rapid expansion fueled by short-term growth, like more of a, how to call it, opportunistic investment, shall we call it?
Yeah, but the quality of an investment is the one that brings, well, actually uses, it's connected to the strategy that you're doing. So having clarity on where you want to go creates for the investor, I would say, the best perspective possible for having return on these investments. Investors think always like that. So I think in creating and in managing to attract those investments that feed your strategy, it's absolutely fundamental. You have to be clear on what you want to achieve, and that gives a signal to investors of if they are matching or not your strategy.
Yes. Well, investment is closely tied to the policy and the governance issues within the country, the broad environment. So what are the most common governance challenges that discourage this kind of long-term tourism investment within the country, within emerging economies as such?
I can give you an example from the country that I come from. We've launched our, I would say, most ambitious strategy in 2006. We've changed, I don't know how many governments. We changed, I don't know how many mayors from the big cities. And the main goals to achieve within our strategy didn't change. So what we want to achieve as a destination, it's stabilized. It is perceived by every stakeholder of the industry of where we want to go. And I think having this approach to have a participative planning process, so you engage with all the tourism stakeholders, that gives the sector a powerful tool to grow within the long term, because that is absolutely needed. We don't, as I was saying, do it from one day to the other. So this stability has to have, well, first, strategy, and a strategy meaning covering different kinds of plans. How do we invest in infrastructure? How do we attract capital investment? How do we create capital incentives for SMEs, but also for big investment groups to jump in? How do you position your market outside? How do you promote your market, your country and your destination outside? At the same time, which quality is absolutely critical if we want to deliver, which is how can we train the capacity? How do we guarantee that we have a tourism workforce that translates into the experience what we have aiming as a destination? That is, I would say, absolutely crucial. So we truly believe, first, whole of government approach as one status of our, one basic element of our policy. So integrating all levels of government into one single vision, then engaging with the private sector and bringing and aligning the private sector priorities with the public sector priorities, and then stability in instruments and in rules. I think that is what differentiates the most developed countries from the others, is that you give guarantees to the ones that are investing, but also the ones that are choosing tourism as their industry for working in their lives. And that stability is crucial for quality of growth.
In regard of Georgia, to bring this back to Georgia, do you see any issues in terms of this policy continuation?
Well, I'm not an expert in Georgia, so for me it's not an easy thing to qualify the level of development. What I can see from the numbers is growing. Numbers of arrivals have been steady growing, which is, I would say, very interesting. And I think the challenge of quality and the challenge of, I wouldn't say that, don't interpret that as a problem, because I'm not sure, but I think sustainability and authenticity of what you deliver will be key for the future of Georgia as a destination, as any, I would say, call it emerging destinations that are coming. So it's be clear on build your development model based on your key differentiating factors as a country, and I would say that is critical for the future. And that means to have quality of experience, to involve other sectors that can potential, I would say, gastronomy and wine and culture, I would say, are three essential elements in this process.
Okay, and alongside that kind of policy stability, I would say, investors also rely heavily on the reliable data, right? And OECD emphasizes on the importance of tourism data systems. So why is it so central in shaping this investor confidence?
Because if you have, and yes, the OECD Tourism Committee is, well, the OECD in general, but OECD Tourism Committee, we believe in data-driven tourism policies. That's what it means. So it means that we build a robust tourism statistics system that can help us to go beyond opinions to facts. And I think that can help us to understand what's happening, to create, to the ones that work within the industry and invest within the industry, a framework of reliable data so they can analyze where they are going. Another important block of this is reliable and comparable, because that gives clarity to investors on how can they progress in terms of development. That it's, I would say, going from opinions to facts. So it's absolutely critical from our point of view also to understand the impacts of the policies that are putting on the table.
Yes, but what are the specific indicators?
You could have. Well, I invite you to go to the OECD tourism page where you can find a serious amount of work that we've been doing in recent years. We have established a framework of sustainability tourism indicators. We have another one on competitiveness indicators. We have a long work on the tourism satellite accounting that helps the national statistics offices into stabilizing a set of data that is collected, that it's reliable, and that can help anyone within the sector to actually take the better decisions.
But what would be one single indicator? The most important one, could you name? Or are they like children? You can.
No, I think the tourism satellite account provides probably one of the most robust frameworks in terms of understanding tourism consumption, of understanding value added from the tourism sector, the direct and the indirect, because I think in countries where tourism is not the leading sector, it's fundamental for the tourism policy area to understand what is their impact in the overall economy as a whole. So I think we typically use the weight of tourism within the national GDP as one important metric. But if you go for the, I would say, private and more micro data, you have ADRs, you have RevPARs, you have a series of tourism indicators that can be used for understanding and for giving, I would say, the ones that develop their economies and their businesses clarity where they are in terms of business development within the country.
But even with data and strong data and policy frameworks, the external shocks play a very important role, and it can reshape investment dynamics within the region, right? So how are these broader dynamics, instability in the world, you touched upon that subject already, this kind of external global risks, geopolitical risks, reshaping capital flows globally?
That is a very interesting question. I can go back a few years ago because we truly believe in data-driven tourism policies that also take us a little bit into foresighting. And foresighting was an exercise. We did it in 2017, I think. And by that time, we tried to look to 2040 as a scenario and as our target period, and we've developed 4 scenarios. And we've developed one optimistic. Tourism is going to grow, so we have to understand how flows within the cities we have to be managed, how sustainability impacts will be there. But at the same time, we had 2 more balanced scenarios, and we had another one, which was from one day to the other. Tourism is stopped. 2017.
Yes.
Imagine that all the people that were participating in the discussions, they were all focused on we're going to grow significantly. No one looked at the no scenario from one day to the other. And in 2020, with the pandemic, we had in 27 days, we went to the best year ever, or the best month, the best January ever, to the nightmare that we had. So putting and integrating tools like foresight into the policy planning gives you, I wouldn't say predictability, because what we're living, and I think since COVID, we had a lot of things. We had inflation, we had geopolitics in many areas of the world. If you invest in tools like foresight, for example, that can help you to be ready, because I think what uncertainty is part of the game more than ever. So one thing that we can translate is how can we, as an industry, so it's not only the public sector, it's public and the private sector together, how can we look at this uncertainty and have tools to manage it? And I think that it's the most important piece that I would add.
And the last question would be bringing this back to Georgia. If you were directly advising the policymakers, what single strategic principle would you emphasize to ensure tourism contributes to long-term economic resilience of Georgia?
I would say having an alliance towards a shared strategy for the long term. Mm-hmm. I think that it's the most important block, because all the other dimensions of action are connected, have to be connected to a shared vision, which is everyone believes where we want to go, and then we will, in each one of our responsibilities, adapt to that strategy that is shared, that it's common, and that everyone understands where we want to go as a destination.
Oh, thank you so much.
Thank you, my pleasure.
I hope our growth in demand does not dwarf this planning policy capacity of Georgia, so we have this long-term outlook, as you have read.
No, I think it's fundamental to have that common vision, because with common visions come really good things in terms of future outputs.
Well, thank you for your time, and enjoy your couple of days in Georgia.
Thank you very much.
Yes.
My pleasure. Thank you.